Adrienne, a lot of folks came into this quarter looking at North America, expecting some degree of weakness, and they got that weakness. The earnings beat pretty handily, and that appeared to be because of China.
Romaine, that's exactly correct. So if you look at any of the macro data, any of the brick and mortar data kind of in North America, each and every one of them decelerated materially during the month of March and then all the way into April. The huge upside here was the significance of the non-North America, the non-US business, and it was across all the brands. So, Coach obviously has the biggest footprint outside of the US, but it was across Kate Spade, and it was also across Stuart Weitzman, which are smaller pieces of the business. But that recovery, I mean, we're talking about 20% constant currency in the March ending quarter and 50%, 50%, expected growth in China for the June ending.
Talk to us a little bit here about inventory levels, because this has been the big story, really, for any sort of apparel maker, any sort of retail out there. Are we seeing a normalization here in some of those inventory levels?
So for Coach, absolutely. They are probably, 1 quarter away from actually having persistent and sustainable sales growing faster than inventory, right? You hear us talk about that all of the time. When sales is growing faster than inventory, obviously you have more risk of upside, right? So positive margin impact versus the downside. And we definitely saw that here. One of the other metrics that we like to look at is inventory productivity. That productivity is really starting to speed up. And a lot of that has to do with the non-US recovery we're seeing outside, in Asia.
When we look at the results that we got out of Tapestry, Coach, Kate Spade, of course, really perennial brands here that I think we all know and love. Talk about its direct competitor here, Capri Holdings, Jimmy Choo, was it Michael Kors, probably forgetting something else there here. Can we extrapolate from what we heard today out of Tapestry into the earnings that we're going to get out of Capri?
I actually think this is quite company specific, unique to Tapestry. So you're absolutely right. The vast majority of Capri Holdings is going to be held with Michael Kors, which is definitely one of the dominant US brands. It tends to be Michael Kors, Tapestry, and Kate Spade that make up the broad swath of kind of US accessible luxury. What I would say the difference maker here is that Tapestry has about 16% of their sales coming from China, whereas Capri Holdings, Michael Kors, only has about 8% coming from that. The other big piece of it is going to be wholesale. So wholesale in North America is about 3% for Tapestry. That was actually down 7%. And this whole kind of destocking phenomenon that's happening all over, right? Wholesale's coming in, down for the next couple of quarters. So Capri actually has, and Michael Kors has about 27% exposure to that channel.
When we talk about the economic conditions out there and the softening in those economic conditions, the general belief, at least in markets, is that luxury goods makers will hold up better because obviously they're appealing to a clientele that by default has more money in their pocket. But I am curious if you anticipate or you're preparing yourself for the possibility that there could be some softness in sales for some of these brands.
There actually has been. So we already are factually seeing it year to date. So Barclays data science team, we obviously have a credit card arm, and we've been watching that. And the luxury spenders, the 200,000 and up, the high-end spenders, 150K on average, those two cohorts have actually been decelerating the fastest versus kind of their 50K counterparts. And that's really because they have the money to slow down on the spending with. So they're not immune. We heard this from LVMH. North America was slowing. And again, it's China. China is the region of the world that is actually accelerating. So they're not immune. But what I would say is when we think about that slowing, it's temporary. And you never want to underestimate sort of over a period of a year how many goods a woman will actually find that she does need.